Hello, I'm here to describe the new Bitcoin signal trend indicator. And this indicator is based on a volatility band, an ATR, average true range volatility band. And uh, let's start with the long condition. So as you can see, there's this red line here. Okay, so that would represent the upper trend band, and if price closes above that red line, it would signal a buy entry. As soon as it signals a buy entry, a stop loss and a target is set. So the stop loss is defined by this red line down here, and then this bluish line up here would be your target. And as you can see, in this case, it took a trade and got out at this point here, at this level. Now, so that would be the long condition. Now, the short condition, let's see if we can find a short condition. A little hard to find a short condition on Bitcoin. Oh, you know why I can't find a short condition? It's because I don't have shorts activated. So in here, I'll go through these individually, but there's this direction. So you can set up your strategy to either trade long only, short only, or both. And it's defaulted to long only at this point. So we can switch that to short only. So if we switch it to -1, as you can see now, it's taking short trades. And if we zoom in, so in this case, the short trade is activated when price closes below the green line, okay? And there is, again, a stop loss and a target set. In this case, we got stopped out at a small loss. So let me go through the inputs here. And so this ATR period is currently defaulted to 120. So what that does is it controls the length of these trends. So if we want to, the higher that number, the longer these trends are. The lower the number, you'll have a little more, the shorter these trends are, because it's going to be a lot more sensitive. This Atr multiplier is a way to control the width of that volatility band. Okay, so the volatility band is the width between this green line here and this red line, which in this case you're not going to see the red line if you are in a trade. So if you're in a directional trade, but you can assume that there's an invisible red line here. So what this does is this multiplier really controls the width of that band. The direction can be set to long, to 1, short, -1, or both. So we can set that to 0, and now it's taking long trades and it's taking short trades as well. Okay. The reward to risk multiplier is pretty straightforward. So we could set that to 3, and as you can see, now your targets move a little farther away. We can move back down to 2. Set really conservative targets, move it to 1. So that really controls your target, and it's a multiplier of your stop loss. Then there's this stop loss deviation, which is based on this percent channel value. So what this means is if we set that to 100%, so to 1, so let's say 1. Okay, so what that means is at the time of entry, it looks at the width of the band, okay, and it will extrapolate that width to get your stop loss level. So in this case, if we were to zoom in here, so at the time of this trade here, okay, there's going to be a width between this red line here and then the green line, which again in this case you're not going to see the lower green line because imagine this always being a band, but you're not going to see that green line because right now we're in a short trend condition. So it would be that width, and then we would replicate that width. So we would take that width and replicate it, use that distance to get our stop. Okay, so if we go into here and we set that percent deviation to 0.5, the stop should move closer, and indeed it does. In this case, you see this red line up here. It's a very, very tight stop, and in this case, we've actually taken that short and gotten out at profit. So let's see here. The trail bar stop. So this is an interesting addition here that I added. Let's set these back to default. So I'm going to set this to 0.75. I'm going to go long only, and the trail stop. So the trail stop bar, the trail stop bar start. What this means is that if you're in a long trade, it will leave the stop at its original position, but after 20 bars have passed, it will actually start trailing that stop. And the trail is basically the green trend line. So in this case, we got out at this level here, so there was no need to use the trailing stop. But let's see what happens. This is a good example. So let's see what happens if we were to give this trade a little more room. So let's set our reward to risk to, let's say, 5. Okay. Let's go a little further out, 10. Perfect. So this is a great example. So as you can see, we enter the long position here because we've closed it above this red line. And now we maintain the original stop. So we're giving some wiggle room. Okay, we're giving the idea a little bit of time to work out, to establish a trend before we start using a trailing stop. So and that is exactly 20 bars. Okay, so this is, as you can see, 20 bars. There we go. So at the 20th bar, we immediately start trailing, and we immediately start using that green trend as our trail for a stop. And as you can see here, finally we have a candle that came down, touched that level, and we exited the position. One more thing, enabled colored candles. This is fairly simple. So if you want to, you can check that, and what that does is it basically gives you a nice pictorial view of the trends. So it will color all of the candles green when you're in an uptrend, and then it will color all the candles red when you're in a downtrend. So when you're taking buy and sell positions. Yeah, that's pretty much it.